Hi there, this is Erik Egelko, and I am super excited to announce episode number 6 of the Easy Deals podcast. All right, guys, welcome back. Today, I am very privileged and excited to have an esteemed guest, Trey Wheeler. He is Vice President of Acquisitions for Tailwind Investment Group. They're a multifamily syndicate based out of Newport Beach. Trey, welcome to the show.
Thanks for having me, Eric. I'm excited to be here and share a little bit about my journey thus far in the exciting real estate industry that we find ourselves in.
Yeah, no, I'm super excited to dive into some of this private equity and syndication stuff. We have not had a guest like that yet on the show. But before we do, to give the audience some context, why don't you tell us a bit about your journey, where you started and how you ended up in the position that you're in now?
Yeah, sure. I'll spare you all the details. It's been quite a journey so far, but graduated from college and started in corporate finance and very quickly realized that wasn't quite the trajectory that would make the best use of my skills. And so pretty quickly pivoted into real estate. Actually, I politely declined a promotion in that role and pivoted basically a 180 into residential real estate. And since that transition, I've had 7 different jobs in 8 years, and they've all been corporate jobs. And really my goal and thesis throughout my 20s was to just be relentless in the pursuit of a career that would really serve me and that I could serve, that I could bring value and passion and energy and something that I could really hone my skill set in. And so that journey has led me to where I am today, as you alluded to, helping grow a boutique multifamily owner-operator here in Newport Beach, California.
Awesome. Well, let me ask you this. I know oftentimes people sort of feel like, like stuck or in a rut at their jobs, and that it's, it takes a lot of courage and kind of risk to jump, both companies and careers and fields. Can you speak to that a bit?
I can. Every time I've made the decision to leave a company, whether I wasn't continuing to learn or earn or have a trajectory that I felt would serve me the best long term, it was still nerve-wracking figuring out, okay, what's going to be next? Why is this next move going to be the best to serve me and help me continue to grow my skill set? And so it gets easier simply because you kind of build the muscle of confidence that you can go out, meet the right people, get in front of the decision makers, present yourself well in an interview, and kind of think about the right way to negotiate based on the opportunity at hand. And so my advice there would be to build a network when you don't need it, because oftentimes, I'm sure you've had this happen, but people reach out as soon as they need something, but you haven't heard from them in years or ever. And so being proactive and building a network, trying to add value to what they're doing, if nothing else, offering a word of encouragement. In real estate right now, as we know, the market is very challenging for a lot of people. And so I think just staying in constant communication with people that you look up to or that you're helping, I think is a great kind of first step in evaluating, okay, what decision do I need to make or what career step might be next. The second quick piece of advice that I would give would be to think about who the people are that are in the field you want to be in that are currently achieving success or have achieved success, and just model what they did, right? Like methodologies change over time, technologies change over time, but principles do not. So thinking about and studying who is where I want to be one day and what do they do to get there, and trying to reverse engineer that process. And then lastly, I would say get as close as you can to that type of person, right? If you can work hip to hip or directly reporting to someone that's doing exactly what you want to do, that's going to get you the opportunity to see the experience and exposure that you need to grow and build to be able to be in their shoes one day.
Yeah, I think that's some fantastic advice and something that I have done a lot in my career. In the beginning and still up to today, I would make a point to always reach out to people who are higher up on the food chain than me, and basically just, tell them, give me some wisdom, tell me what your secrets are. And I think a lot of people are intimidated by this kind of thing, thinking that, why would this person help me? But you would be super amazed. I mean, people are flattered, and people find it very rewarding to help younger, newer people out. I have tons of people hit me up who are new to the real estate business, and I remember being in their shoes. So I'm totally open to giving people that kind of free guidance.
Yeah, and as do I. Just one more kind of quick piece of advice here when building a network, especially on a cold reach out or relationship. It's important to be thoughtful about the delivery of a message, especially something written, on LinkedIn or an email, etc. Like, words always come across a little harsher in writing than they do in speech. And so just remembering that tone does not necessarily come through in an email or a cold message on LinkedIn. And secondarily, what's worked really well for me has been simply to do a little bit of research, 2 or 3 minutes on the person's background, who they are, where they've been. Hey, so-and-so, really impressed with your career success thus far. Congrats on X number of years at blank company. I'm getting into, commercial real estate or residential real estate, whatever it may be. And I'd really appreciate any insights or advice you'd be willing to offer, even if it's just 5 to 10 minutes. It'd really mean a lot. Thank you. Right? And so you're opening the door for them to be the hero. You're not demanding their time without first building a bridge of respect. And so that would be something I'd really focus on if I was doing cold reach outs today.
Hell yeah. Awesome. Well, those are some great tips. So I know you mentioned you've been in a ton of different roles over kind of a condensed period of time. Can you map out for us, the different companies and the different roles that you've been in?
Yeah, absolutely. So as I alluded to, I started right after graduating from the University of San Diego. I studied finance. I started in a corporate finance job in downtown Seattle, where I was largely grew up and raised. And so I was working in a kind of classic entry-level job for a high net worth and institutional tax advantage money manager, which is a fancy way to say they help people be more tax efficient in their stock investments. And so I had the glorious role of doing client onboarding and auditing and setting up accounts, and very entry level, and quickly realized through a series of events, number one, riding the bus to and from Seattle every day, I would get on the bus and I would look around, and people that are 10, 15, 20 years senior to me, they look like zombies. Their headphones are in, their hoods are on, they're sleeping, they're glued to their phones, and this was everyone on the bus. And so at a young age, I took in that information and I made a decision. If I'm on the bus, I'm reading a book. And so for the 2 years early in my career that I commuted to and from Seattle on a bus, I was, face in a book, nose in a book. And so I probably read 200 or 300 kind of self-improvement, business, real estate books in that period of time. And I feel like that really launched not only my career trajectory, but also my vision for what's possible. And so I would advise everyone to, get your nose in a book. You get a lifetime of wisdom on a topic from someone in 3 to 4 hours. I digress. So that corporate finance job, after 8 months, I was humbled and offered a promotion, which was great, but I politely declined. I didn't feel in good conscience that it would be right to accept it, knowing I was likely to leave as I had just received my real estate license. So I started my second role at a real estate investment brokerage. So we were helping clients buy properties at auction, analyze fix and flip deals, and basically flip homes from the brokerage side.
And this was in the Seattle area?
Correct. Yes, Seattle area. This was circa 2016, 2017. So the market was, I wouldn't say it was roaring, but it was strong, and it was pretty interesting to be a part of that for about a year. And I was hosting an open house. We did also retail brokerage, helping home buyers as well as the investment side. So I was helping host an open house for another agent in the office that had successfully completed a flip project. And so I was hosting the open, helping try to sell it, find a buyer, and ran into a gentleman who turned out to be the co-founder of a pretty cool tech startup. He was a former Microsoft employee, and ended up kind of striking up a conversation, which led to a coffee, which led to another coffee, which led to a job offer. And so pretty quickly, I found myself pivoting again from 100% commission brokerage on the residential side into essentially what was a fintech, real estate startup in Seattle, 2017, 2018 time period. And so during that time, I was employee number 7 at the company, which was pretty awesome to be, early on. Ended up growing in a year's time to about 50 headcount. We raised a seed round from a local billionaire named Mark Vadon, and then a Series A from Andreessen Horowitz. And so got to see some pretty tremendous growth. And my role there was interesting. I was in charge of the sole source of revenue at the time, which was buy-side commissions, helping our clients win their dream home from the buy-side. And that was kind of what we did. And so it was a specialized model where everybody internally had a specialized role, and you could think of it more of an assembly line as opposed to the traditional brokerage route where one agent helps you from A to Z. And so my role was pre-negotiating and negotiating contracts on the homes of the clients, on behalf of our clients in the home that they wanted to buy. So we're helping 25 to 30 families buy a home a month. Each of those families might look at 3 to 5 houses seriously at any time. So I was on the phone. I was busy calling listing agents, trying not to be bothersome, but also position my client in the best light in anticipation of an offer in a competitive situation where there are 5 to 10 or 15 offers on these desirable homes. Everybody had money, so it was really about building the relationship up front with the listing agent, and then pushing for our client's offer there. So
let me interject, because this is really interesting. So winning your dream home, how would you structure this offer to help people win in a competitive environment?
Yeah, it varies state by state. Obviously, contracts are a little bit different, but in the state of Washington, there's something called an escalation clause in the contract, where as a buyer, you say, I will pay up to a certain price, but no more than blank amount over the second best offer. So I'll pay $1,005,000, and I'll pay $5,000 more than the next best offer. Well, if the next best offer is $1 million, the escalation clause kicks in, and you pay $1,005,000 for the house, right? So if you're in second place of $1 million, if you pay $5,000 more, the next offer could up their offer. If they had a $1,050,000 and they pay $5,000 more, right? So I used the wrong numbers, but you get the idea. If the second offer continues to raise their offer, the first offer continues to beat them because of that escalation clause. So we found that if we would credit closing costs to the seller in an amount that's greater than that standard $5,000 escalation, that on a net proceed basis, the second offer would actually be better than the first, because you escalate off of the price, not off of the net. So using the same example, if buyer 1 is at $1,050,000 and buyer 2 is at $1 million, and buyer 1 has a $5,000 escalation clause, the total price to the seller would be $1,005,000 in that scenario. But if my client, who was in second position at $1 million, offered $10,000 in closing cost credit to the seller, all of a sudden the net offer to the seller is $1,010,000. So even though we're not as high, or we're not chasing on price, our net to the seller is still better. So we have found success using that just as one strategy of many to help clients not only win their dream home by beating out the next best offer on a net basis, but also not play the price chasing game up and up and up, right? If my client offered $1,030,000, then it would get to $1,035,000, right? So that was kind of one strategy that we had. But I think building relationships is huge. Like in real estate, relationship capital is what makes the world go round. I think being proactive and talking to listing agents, a lot of buy-side agents would just submit an offer, never talk to a listing agent, and just cross their fingers and hope for the best, hope that their client's financial situation, the terms of their offer, and or the price would win it over. But in reality, talking to the listing agent, positioning the client ahead of time so that they know who we are when it comes to negotiation, and they'll pick up my call on the offer review date, right? If I'm calling, hey, did you get my offer? I'm calling, hey, how are the meetings going with your seller? How's our offer look? I'm calling, hey, what do we need to do to win the house? Like, Mr. and Mrs. Listing Agent, it's your fiduciary obligation to your seller to get them the best offer at the best price, and I'm willing to do what it takes because my client wants this home. What do we need to do, right? So if you spin it in such a way that creates a collaborative environment, then oftentimes listing agents would divulge the information that we needed to go back to our buyer and say, hey, if you do this, you can get the house. So oftentimes the buyers would say, no, I'm not comfortable doing that. And that's fine. But my job was simply to get the information to help the buyer be educated and know, hey, if you do this, it's your house.
Yeah, I think the being in communication with the listing agent and forging those relationships is some super great advice. I have found on the principal side of buying deals that if I am basically just blowing up the listing agent, checking in with them constantly, it sort of creates this external pressure that the path of least resistance is to give me the deal, because they know that if they don't, then I'm going to continue to harass them. And I would say that on numerous occasions, just incredibly persistent follow-up and constantly having that open communication with the seller's broker will win you a lot of business.
It will. And I try to take the approach of pleasant persistence, right? So if you always do it with a smile, you ask a lot of questions and try to get them on your side of the table, or better yet, go sit on their side of the table, so to speak. I found that people can feel good about relenting rather than resenting you for having relented.
Yeah, and I think part of it, so what I tell the new agents here at our company is that you want to be polite and pushy at the same time.
Sure.
And that oftentimes I will explain it to the corresponding broker that, this is going to be such a convenient transaction where we're already familiar with the asset and the submarket, and that by working with us, you are going to have so much of a surety of close that it's going to be, a very harmonious transaction, which oftentimes as a listing broker, you want to do the best by your client, and the best includes both the highest price and the highest likelihood of closing.
Right.
Just because oftentimes people will sort of chase the allure of shiny objects and get this higher priced offer that ends up being this incredibly stressful nightmare. And oftentimes there's renegotiating involved, and the allure is not what you once thought it was. So, anyways, again, I'm back on track here. So, you started out sort of at the bottom of the food chain in the corporate ladder. You jumped into being a real estate agent. Then you jumped back into the corporate world in this tech company. What happened next?
Yeah, I realized that just kind of zooming out, my thought has been that I want to stack as many skills as I can in the direction that I want to go. And so I felt like at this point in my career, after call it a year at the startup, I was frankly burned out, right? Like I was taking calls at 7 a.m. I was taking calls with clients overseas at 10 p.m., working, 19-day stretches in a row many times. As you know, residential real estate is a 24/7 game. And so realized that, number one, I was feeling burnout, but number two, I needed some outside B2B sales skills, right? I wanted to deal with professionals on a face-to-face handshake basis. And, the negotiation role that I was in there helping our clients was great, but I was on the phone, I was tied to my desk. It wasn't a very dynamic role in that sense. So ended up pivoting into an industry that I had some friends that were succeeding and doing well, and which was actually staffing and recruiting. So I dipped my toes in that business, that industry, and ended up calling on Fortune 500 clients, actually down in Los Angeles. I had relocated down to LA to be closer to my now wife. And so I was calling on NBC Universal, Warner Brothers, Disney, all the large studios, trying to figure out who's hiring, what are their initiatives, how can my firm help be in a position to place human capital with them. And so I got the experience I wanted. I got to cold call, email, reach out, meet people. I was meeting 10 to 15 people cold for coffee or lunch every single week for more than a year. And so as you can imagine, you get a pretty good ability to go from cold, hey, how's it going? Thanks for meeting me, to trying to become friends with someone in 30 to 45 minutes. And so that really helped me build up confidence in meeting strangers and understanding what makes people tick and how I can really navigate a conversation in a positive manner. And so ended up thinking that it may not be the best long-term career for me. I really did enjoy real estate, and obviously being in tech staffing wasn't really kind of the vision that I had for myself. And so after going on my honeymoon, getting married, I had some time to step away and reflect, realized that, okay, I need to get back into real estate. And so ended up leaving that role summer of 19, started to get my real estate license here in California, ended up relocating to Orange County without anything lined up, and really put on my networking hat. So over the next 5 months, I kind of ran parallel tracks. So I got my real estate license and I met with as many people as I could, asking them for their advice on, hey, principal or brokerage? Do I want to go to the ownership side of the business? Do I want to try to cut my teeth in brokerage and evaluate what was going to be best for me? In parallel to that, I started focusing on understanding how multifamily syndications work. I built what you could consider an institutional type model from Excel from scratch, did a lot of data analysis on different markets around the country, built a website, started to think about trying to raise capital to put deals together. And so really was just trying to keep my mind open to as many options as I could in the multifamily space. But ultimately decided consciously not to raise capital. I felt like my experience and my ability wasn't quite where it needed to be yet to go and raise money with confidence. One conviction that I have that I wish more people would adopt is this. Just because people are willing to give you their money does not mean you should take it. And I realize this. I haven't had hands-on experience in multifamily yet. And so who was I to think that I could sound really good and raise money from people and figure it out as I go? Figuring it out as you go on someone else's dime is not a strategy for success, in my opinion. Like, reputation risk is the biggest risk to every individual in this business at any given time. You only get one of them. It's very hard to repair. And so being thoughtful around, okay, what experience and skills do I really need to help me get to where I want to be eventually, which is likely raising capital, putting deals together, et cetera. So I made the conscious choice to join Cushman & Wakefield. I focused on multifamily investment sales for almost 3 years here in Orange County. 4 months after I started, COVID happened, and that was an interesting part of the journey. So we can pause or continue.
Yeah, we got a ton of stuff to unpack here.
Yeah.
I guess going back a bit to the staffing and recruiting role that you had. So you're prospecting these high level executives at these enormous organizations, which obviously they are just inundated with solicitations all the time. What can you do, or what were you able to do to grab their attention? Like what is the secret to prospecting, high level C-suite type of folks?
Yeah, there are a number of things. I think number one, presenting as human is important. I think everybody in today's day and age wants to outsource to AI or some type of algorithm that can do the work for them and just play the numbers game, and eventually something will stick. But I can tell you from experience that taking a sniper approach, doing diligence on who they are, where they've been, what they do, any news articles about them, where they went to school, where they grew up, where they went to high school, common connections that you have on LinkedIn, do they have a Facebook or an Instagram? Like, these are all little things that add up in a cold reach out. Hey, so-and-so, I saw you spent time at University of San Diego. Always great to meet a fellow Torero. I'll be on site at blank company next week. Would love to shake your hand and say hello if you have 5 to 10 minutes to catch up. Like, that's a lot different than, hey, I'm so-and-so from this company. We help X do Y. Are you free to meet next week? Like, if you can personalize it and just kind of oh shucks, I'm going to be there anyway, right? Like that actually lands really well for people that are busy. At least that's kind of what I've found.
Yeah, no, I think that's some great advice. I get solicited constantly on LinkedIn. I mean, my inbox is just filled with these things, and it cracks me up how ineffective some of the stuff is, just because someone will send you a connection request and then you get like this 6-paragraph essay with a calendar link, and it's like, I don't even read it. Whereas sometimes I would say maybe less than 5% of the time, someone will do what you just said, is they'll actually look me up personally, they'll find out some information about me, and they'll send me more of a personalized, informal outreach. And that pretty much works 100% of the time. So I think that the sniper approach of quality over quantity when it comes to prospecting really pays off, especially when you're dealing with bigger ticket customers. Awesome. So that's some super great advice. So you get down to LA, you join the big CRE brokerage firm. Your first, call it 12 months in the business. What did that look like for you?
I started in December of 19, and I was off to the races. I was cold calling, making my 100+ calls a day, meeting owners, in their living rooms or at their properties, learning about their history of ownership of that property or their portfolio if they had multiple properties, understanding kind of their goals and initiatives. I think to get in front of people in the brokerage business, it's pretty simple, but it's not easy. You have to balance making a large number of phone calls and connections with specific value to whoever ends up picking up the phone on the other end, right? So what I found was helpful or meaningful was to cold call geographically and bring some type of information that was relevant to people in that geography, whether it be local legislation, interesting purchases, therefore sales, transactions in that submarket that were recent or relevant to their property. If I had a listing nearby, obviously circle dialing around that listing could be helpful. If I had a buyer that was in an exchange, wanted to own in that area, soliciting on behalf of the buyer. So there are different things that you can do, but I think taking a thoughtful approach about how am I going to add value to the person on the other side of the phone is really important, because dialing for dollars or smiling and dialing, like that may work, but I didn't want to make 200 or 300 calls a day. Like I didn't want to grind for 5 years, trying to figure it out, just hoping to get lucky, right? Like I wanted to be thoughtful and add value to people and build good relationships, which I feel like I did very early on. And then COVID hit in mid-March. And unfortunately, a lot of the clients that own in the private client multifamily space here in Orange County have tremendous amounts of equity. They've owned properties for a long time, and therefore they're older. And so, if we can all think back to 2020, nobody wanted to shake anybody's hand, right? Until we all kind of knew what COVID really was. And so everything went virtual. So here I am, a new agent. I don't know anybody in Orange County. I don't have a network, and I'm trying to call owners of apartments. They've never met me. I've never seen them face to face, and I'm trying to build rapport with them over the phone. And so that first year was very challenging. I made not 6 figures in my first year, not 5 figures in my first year. I made 4 figures in my first year of brokerage. So anybody that wants to get in brokerage, that is possible. It is possible to only make 4 figures in business. But I sold a 4-plex in the city of Anaheim, and I think my commission check was $4,900. So it's not for the faint of heart, but I think if you stick it out, then you will see success. Year 2, 5 figures, year 3, 6 figures. So the trajectory was there, and success came. But early on, you really have to have resolve that I got in this business for a reason. I'm going to stick it out. Minimum of 3 years is what it takes to build reputation in a market, and also allow for attrition of competition so that you can go and get more market share by doing the same amount of work.
Yeah, and I'll tell you something I think really powerful that you touched on here is that real estate brokerage is very simple. It's not easy, but it's simple. Mm-hmm. And I think oftentimes people try to overcomplicate the business development process, and they want to come up with a hack or a shortcut or some kind of automated way to avoid those uncomfortable activities of picking up the phone, going door to door, cold outreach to people, when it's like all of the time that you waste trying to innovate, you could just spend on tried and proven methods. Mm-hmm. and that oftentimes people have this phone anxiety, that they're afraid to call people when it's like there are way harder jobs than this. Mm-hmm. You could be on top of a roof in Bakersfield, laying down, new roofing, whereas you're sitting in an air-conditioned room wearing slip-on shoes, calling people. Like it's really not that challenging. So you had mentioned a bit in our pre-interview that you had a pretty exciting first listing. Why don't you tell us a bit about that story?
I did. The first listing that I got when I was at Cushman & Wakefield had a gang shooting and unfortunate death during the marketing period of the property. And to add insult to injury, there was a vigil that was put up in the cul-de-sac of this near the property that was there for probably 6 months. And I totally understand the community aspect of doing that. But as you can imagine, in this one-way street with a cul-de-sac, every prospective buyer that came to the property looped around the cul-de-sac. And that made our job a little bit harder, as you could imagine. The property was not in a very well-located area. It was run down with quite a bit of deferred maintenance. The owner had owned it for 20 plus years and decided that his return on equity was too low. He didn't have any debt, or maybe had a very small loan on the property, and decided to exchange into a nicer submarket to a better property that was newer with a more favorable unit mix, and reset his depreciation, improve his return on equity, capitalize on the accretive debt that was available in 2021. And so it was a very successful transaction. We ended up selling it all cash to a dentist who ended up writing a check for it. He was going to renovate the property before he went to put debt on the property post renovation. And our client was able to increase his unit count, greatly increase the number of bedrooms in the property, get into a better school district, and had some put some good fixed rate long term debt on it. So it was a win, but it was a struggle. Yeah.
Yeah, no, I would say a gang shooting is not a buyer objection that most of us deal with often. Yeah. So yeah, definitely funny. It makes me think of I sold a property in probably a similarly bad neighborhood. That it was a single tenant bar that was across from the Navy base, mm-hmm. and there was just a overwhelming amount of daytime prostitution going on around this property. Hmm. And I went down there to check it out when I was in the process of pitching the listing. Mm-hmm. And it was like a scene out of Grand Theft Auto. I mean, you'd be nervous to leave your car anywhere. Mm-hmm. And I was super fortunate that the tenant ended up buying the property. But it would have been pretty hysterical had I done a drone and made a brochure, and in all of the pictures you have these streetwalkers surrounding the building. Yeah. So I think that people who look at real estate brokerage think that it's all of this glamorous stuff, when it's I would say there's a ton of transactions that are dirty and hairy, mm-hmm. and don't have quite the dramatic appeal that people see on HGTV. Yeah.
I would make the argument that most commercial transactions are, run-of-the-mill, dirty, sleepy, tired properties, right? Like, flipping homes on the coast on HGTV is like, there's a lot of eye candy in that, and it's awesome. It's fun to watch. I watch that stuff from time to time, but being in the trenches, 99.9% of brokers are going to be selling very bread and butter properties, very cash flow oriented properties, and B and C locations. Institutional brokers obviously sell, nice, newly constructed property, but in the private client space where I was, and here in Orange County, product is older, 60s, 70s, 80s construction predominantly, and it's more of an appreciation type market. So I think it's interesting. Just getting into brokerage, having the right perspective is super important. Play the long game. Do the blocking and tackling fundamentals well for a long period of time. Don't get caught looking around at other people that are making more money because they've been in the business longer, and focus on adding value to clients. Don't focus on the paychecks. Focus on the inputs, not the outputs.
Awesome stuff. So you had this brokerage role at Cushman Wakefield that you decided to transition out of. Into this syndication work that you're doing now. Tell me, what was your motivation, psychology to make that switch?
Yeah, so spring of 2022, as we all remember, the Fed started hiking interest rates. And as I was evaluating my client base, as I mentioned, 40, 50% or more equity in their properties, everybody that owns real estate that I would want to sell had been basically flashed or taunted with these really juicy BOVs, broker opinion of value, that are at really high peak prices for 2021, 2022. And so I'm thinking to myself, okay, well, if the Fed starts to hike rates and that causes rates to go up, even on the middle or longer end of the curve, which it may or may not, but if it does, then that's going to bring a pretty grinding halt to transaction volume. And around this time, I was expecting my first child with my wife, and realized that, okay, 100% commission going into an elevated interest rate environment with CPI prints at 7, 8, 9%. Like, my conviction was that the Fed was going to swing their hammer as hard as they could, or as hard as they needed to quell inflation back to a 2.5 kind of 3% level. And I had breakfast with a good buddy of mine who's a very successful loan broker in, I think, April or May. And he made a comment that I found really interesting, which was, yeah, I don't remember, I can't think of the last time I signed up a small apartment deal for a new loan on purchase. It's been a long time. And so just hearing him say those words was, to me, a leading indicator that volume and velocity of transactions was about to fall off a cliff. And so, as we all know, it did. And there was definitely a defensive move for sure. Like I was on the other side of 2.5, almost 3 years at Cushman, and had built up a reputation and had some great connections and things like that. But relationships and connections don't pay the bills, right? And so thinking about, okay, what can I do to insulate my family if this turns into a real estate recession because of the Fed, creating this economic correction, if you will, and causing people to have balance sheet distress. And so ended up actually, before joining my current firm, I spent time at an online syndication company that at the time was the largest in the world, and basically pools retail investor money, everyday kind of working folks that are accredited, and connects them with institutional type opportunities, whether that be existing acquisitions or development. And so my role there was on the capital markets side, sourcing new opportunities from institutional type sponsors to bring to the marketplace. So the goal was to democratize investing, right? So that you or I could go and invest relatively small sums of money into big projects with really renowned sponsors that are very hard to allocate capital into because they typically or historically have raised with institutional money. So this allure of being able to invest into those types of deals for the everyday individual was pretty tremendous. And so I spent some time there, albeit not as long as I expected. I believe I was employed there for 98 days. I was let go after the Fed hiked 75 basis points on 2 occasions. Our retail investor demand dried up and diminished tremendously, as you can imagine. There was a lot of fear and uncertainty in the market, which resulted in underperforming on equity raises on the platform, which resulted in not being able to go to bring new sponsors onto the platform with confidence. As you know, like a marketplace, it requires a network effect, and you kind of have to have both sides to tango, if you will. And so at any rate, I kind of got caught in a last in, first out situation, and they just had to right size the team, and I was kind of in the wrong spot at the wrong time. So ended up being let go from that company in, I believe it was November of 22, the only time I've been laid off. So that was kind of an interesting experience, especially with a newborn baby and being the sole provider living in Orange County, which is not a cheap place to live. But fortunately, timing-wise, it all worked out. I ended up kind of going back to my network and taking a number of meetings and finding my way here to Tailwind, where I'm employed today.
Awesome. So the multifamily syndication space, for the uneducated viewer, can you give like a 2-minute layman's explanation of how all of that works?
Absolutely. So investing in real estate historically has been the right thing to do in terms of inflation hedge, tax benefits, receiving cash flow, and getting appreciation. Right? That's why people invest in real estate. And so for moderate to high net worth earners that are doctors, attorneys, surgeons, people that need additional tax write-offs, investing in real estate is a very attractive opportunity. But oftentimes, those are high-paid W-2 professionals that don't have the time or resources to go and buy properties themselves. And so the syndication model arose as a means to pool money together from these individuals and then on their behalf go and buy property, operate the property, reposition the property as needed to generate a profit, and then sell the property and return capital plus ideally a profit back to those individual investors that otherwise would not have had the time or bandwidth or expertise to do it themselves. And so that is syndication in a nutshell.
And from the sponsor's perspective, what is the advantage to putting together a syndicate versus just investing solely as principal?
Yeah, if you can, as a sponsor or as a general partner, pool together money from other people, put some skin in the game in terms of your own money as well, then the return on your own dollars is greatly enhanced as a result of bringing in more people. And if you just put numbers to this and think about it, if I need to save $1 million as a down payment to buy a $2.5 or $3 million property, it could take a long time to save $1 million. But if I need to save 100,000 and I can raise 900,000 from friends and family or people that I know, and then we can go and buy that property. Well, all else equal, I could do that, 10 times faster than having to wait to save $1 million. And so it really allows for a velocity of capital to capitalize on an opportunity in a market. And there were a lot of folks and groups that did this in 2017, 18, 19, even 2020, and did it successfully. They purchased a property, they repositioned it through a value add strategy, and they sold it into a bull market or a very strong market with low interest rates, low cap rates, high rent growth, and made tremendous amounts of money, 2, 3, sometimes 4x multiples on the investor equity. And as a general partner, that can translate to a 10x or greater return on that $100,000 that I mentioned. And so it's really just leveraging other people's money, but also providing a return to those investors before the general partner gets a return themselves, and kind of helps other people invest into real estate.
Yeah, I'll tell you another, I would call like an intangible benefit of being a sponsor, which I am very small time in terms of the private equity, but it's something that we're building up right now, is that my limited partners are getting returns that they would otherwise never get. Mm-hmm. And most of these people that I'm working with currently are family and friends, and that it's very rewarding to be able to help people in that way, and to basically rent out my expertise when it comes to executing on a real estate deal. So it's the whole thing is about making money, but I would even say that it's more than that. That if you can help other people achieve their goals, that is very, very rewarding. So diving into Tailwind as a company, what do you guys buy? What kind of deals are you guys chasing at the moment?
Yeah, so today we own 8 assets totaling about 1,700 units across the Southwest and Mountain West U.S. And so those are larger, more institutional type assets. We focus on multifamily across the West Coast. And so our goal right now is to continue to grow our portfolio, continue to grow our platform, and we believe that there will be tremendous opportunities that will present themselves over the next 12 to 18 months. Not sure how far down the rabbit hole you want to go, but have a number of thoughts on how we got here. But in short, from 2020 to 2022 and kind of that 3-year period, unfortunately, there were a lot of newer or inexperienced syndicators that went out too far on the risk curve or the risk spectrum. So instead of buying quality real estate, they maybe bought inferior or lower quality real estate at the same prices as quality real estate. And so if you think about that logically, there was no risk-adjusted return calculus done when those properties were purchased, because the market was on fire and everybody was chasing absolute returns. They weren't thinking about risk-adjusted returns. And so now, as the market has shifted dramatically in the opposite direction, those absolute return chasers are largely upside down, unfortunately. So there are a lot of folks that maybe they purchased a property with a 75% loan to value at the time of purchase, plus they financed their capital improvement plan or budget. So maybe they're all in at 85% loan to cost at the time of purchase. However, with the pullback in values and kind of the resetting of cap rates and interest rates in certain markets, a lot of those loans, unfortunately today, if you mark them to market, those loan values are anywhere from 125 to 150% of current value, if not worse. And so, we believe that lenders and banks will, quote unquote, extend and pretend as long as they can, but eventually, those loans will come due and they'll have to be paid off or short sold through REO or foreclosed upon. And so we think that that'll present a lot of opportunity on the buy side in the next 12 to 18 months.
Our mutual contact, Dylan Freeman, has been doing this fantastic series on LinkedIn about troubled assets. And, it's very interesting looking at some of these projects, like you mentioned, where there was a big construction budget incorporated into their initial financing. That it's, they had some incredibly optimistic pro formas on, market rents and these kind of things. And yeah, I would agree with you that I think there is definitely turbulence coming, but my perspective is that for everyone but the investors in those deals, it's a big opportunity. It's one person's trash can be another person's treasure type of concept. So let me ask you this: for brokers who are watching this, who want to present an opportunity to your firm, what does your buy box look like?
I think that's a great question. Our conviction is that strategies change as markets change. To have a one-size-fits-all strategy across every single market type maybe isn't the best approach to take. And I realize that you have to balance being strategic based, also with being having expertise in a certain area. But to answer your question, we're looking at properties that are 70s and 80s vintage, all the way up to brand new construction or in lease up. And so we have different buckets of money that we would pull from for those types of opportunities. But I would say generally we're looking in the $20 to $75 million price point. Generally that equates to 100 to 300 units. Obviously, if it's prime coastal real estate, price per unit's higher, the unit count will be lower. But I would say that we're looking for middle market and institutional type opportunities where there's some type of value creation opportunity, some way that we can move NOI, whether that's through value add interior renovation plan on an older asset that's tired or owned by a family for a long time, all the way to maybe some operational efficiency because an institutional owner is asleep at the wheel and they're milking the property dry from an OpEx standpoint. So there are a lot of different ways to create value. The property doesn't necessarily have to just be old to create value. You can actually do that in newer properties as well. You could do a bulk internet agreement where you're not adding any cost burden to the residents because they're going to pay for internet anyway, but you can essentially pay, call it $30 to $35 a month to a large provider, call it Google Fiber, for example, and then you turn around and charge the residents $55 or $60 a month, and now you have a new profit center that is no additional cost burden to the resident. So that's just one example, but there are things that you can do creatively to add value to properties, and that's kind of the space that we try to play in.
Awesome. Well, I want to make sure that we touch on everything before we wrap up here. You have been super active on LinkedIn. I would say of the people in my network right now, you have one of the much more sophisticated social media marketing approaches. Tell us a bit about what you're doing, what is working for you, what's not working for you in terms of building your network on LinkedIn.
Yeah, thank you. Don't consider it to be super sophisticated. It's not super fancy, but I appreciate that. I think number one is consistency. I haven't posted every single weekday since I got started, but it's been pretty close. And LinkedIn has a native scheduling program for anyone that doesn't know, which means you can draft your post inside of LinkedIn and there's a little time clock and you click the clock and you can schedule a post for the future so that you don't have to write and post at the same time. So that's something that I try to take advantage of. I'll draft several posts in advance and then program them to post at 8:30 a.m. Pacific on weekdays. And so for anyone that wants to check out what I'm doing, 8:30 a.m. Pacific, you can find me there and read some of the content. But I would say generally, I think that you have to try to strike a balance between kind of 101 educational level content that is educating people on how to become great at the basics, because masters are really just experts at the basics, right? Like Tom Brady was not some phenom athlete, that sort of thing. Like he just got really good at the basics. Obviously he had a gift, but he stewarded his gifting well by becoming a master of the basics. And so I think that in real estate it's the same way. If someone's gifted to talk to people, to analyze deals, to build relationships, like that's the gift, but you have to steward it well by becoming really good at the basics and filling in the gaps where there are deficiencies. But on the content side of things, I would say focusing on delivering value in the basics. is important. I would say learning how to copyright is also important, because if people don't click on your post, then it doesn't matter how valuable the information is. So there's an element of understanding human psychology and how people think about, stopping to scroll on a certain post and why they would do that. And so I think learning that skill over time is important, and that comes with experience and education. And then also, I think thirdly, having a differentiated opinion on kind of what's going on in the marketplace. You don't have to be, way out on a limb and kind of crazy talk. Like, you can have your own differentiated opinion that's nuanced, but I think knowing what you think about today's market, where the market may be going, what you've seen happen that's led us to this point, and what you're doing about it in your day-to-day business. Like, if you can kind of take a 360 approach of what the heck's going on right now, and then you can articulate that out to an audience, that tends to resonate pretty well. And, worst case, people will chime in with their differing opinions, and that's okay, because it creates dialogue, and frankly it creates visibility. And so I certainly don't subscribe to the thought that I want to post clickbait things that get people riled up and commenting. I try to keep it as down the fairway and mellow as I can, but I have found that people that engage in conversation often leads to new ideas for content in the future, and so it kind of becomes this flywheel. But I would say, to recap, consistency, having a differentiated opinion, and talking about 101 education and balancing that with kind of your own perspective is kind of what I've tried to subscribe to thus far.
It's really interesting that you mentioned this. That's controversy really does sell in terms of getting exposure on social media. I had put out a video on YouTube earlier this week, and there were these two guys who were just duking it out in the comments, arguing about it, whether or not there was a housing shortage, and they would have these long, multi-paragraph edited arguments. And my video ended up getting a bunch of views as a result of this. And I actually hopped in the comments, and I was like, gentlemen, I'm just super flattered that you guys are here arguing in my comments. Thank you so much. So there's definitely creating some sort of a provocative opinion, and inspiring this back and forth debate, I think is an excellent marketing strategy. So let me transition for a moment. It's been some excellent stories about your career progression here, and many of the people who watch this show are in the early stages of their career, whether it's in real estate or just business in general. What advice do you have to people who are just getting started in their career, based on your experiences?
Yeah, there are three things that come to mind out of the gate, especially to people that are just graduating school or early in their career. Number one, if I could do it again, I would focus on doing internships rather than getting a full-time job right away. If you think about it, internships are great because they have a defined end date, right? They're for a finite period of time typically. And so you can get into an opportunity to get really close to someone that is doing what you think you want to do. You can learn from them. You can buy them their cups of coffee. You can pick up their dry cleaning. Maybe you get to go on client meetings with them, whatever it may be. But you can learn through osmosis just by observing kind of how they carry themselves, what they're doing. And at the end of the 3 or 6 months, if you agree to part ways, then no harm, no foul, right? You got the experience. You now have the connection. You move on to the next. And so rather than spending a year in a full-time corporate job where they pay you a salary, they pay for your benefits, they onboard you, they invest in you, and only to leave after 9 to 12 months, like sometimes that's hard to present well optically on a go-forward basis on your resume. Hey, I saw you're only here for 9 months. Why'd you leave, right? So if you can do, instead of working 2 jobs in 2 years, maybe you can do 6 or 8 internships in 2 years. You can cover such a wider and deeper breadth of subjects or topics or industries. And so for people that are industry unaware, or maybe they want to be in real estate and they're somewhat career unaware, I think internships are a great way to go, number one. Number two, networking is super important, especially in real estate. And as I mentioned earlier, being proactive in your networking strategy, asking people for their advice or insights or wisdom, really making them feel great about what they've done so far and their achievements. Like the human emotion element needs to be thought about before you press send on a cold message. I think picking up the phone and calling people is a great strategy. If you have confidence in doing that, you know how to talk to people eloquently. And if you want to get in a brokerage, like part of the process of trying to get a brokerage job is picking up the phone and calling a broker multiple times, right? Like it's part of the test. So that's number two, is building a strong network across a wide variety of folks that could maybe help you, whether it's through education or hiring or referring you to someone down the road. And then number three is just to continue to learn. Like from what I've seen and what I've experienced, career success runs in parallel to continued learning. As soon as learning stops, careers tend to plateau. And so I've always been a reader, listener, and consumer of podcasts. And so just trying to think about, how do other smart people that I want to be like one day think? What are they saying? What are they looking at? What decisions did they make to get them to where they are today? And how did they think about making those decisions? Because it's one thing to observe, what did they do? How did they do it? But how did they think about it before they did it? Like that is a super, I think, nuanced take on how to become successful, and learning and thinking about how other people are thinking is really important. And so that leads me, I guess, to kind of a bonus point, which is try to get as close as you can to someone that's doing what you want to do. And I know I touched on this earlier, but I'm just going to reiterate it because it's so important. If you can get close to someone that's has a successful track record doing what you're doing, or is willing to mentor you either directly through coffees and calls and lunches, or indirectly through the internet, like focus on that and soak that in. We have more access to people that are wealthier, happier, more successful than ever today because of the internet, because of social media. And so take advantage of that. Focus on curating your own Instagram or LinkedIn or Facebook or whatever social media platform experience, so that you're getting more of what you want out of your own life rather than just being entertained to death. Those would be kind of the four topics that I would recommend to anyone getting started.
Well, no, that's some super awesome advice, and I think that the viewers can, it's very actionable, which I appreciate. So, well, this has been super awesome, Trey. I appreciate you coming on and sharing your story and all of these valuable insights. For people watching who'd like to get in touch with you, what is the best way for people to reach out?
Yeah, happy to be here, and thank you for having me, Erik. I'm most active on LinkedIn, as we mentioned earlier, so you can find me there. Trey, Trey Wheeler, and I write a weekly newsletter that goes out Saturday mornings. It's just some of my thoughts on different practical principles, career tips, advice, and a touch of real estate as well. And so for anyone that would be interested in receiving a 4 to 5 minute memo each Saturday, you could subscribe for free to that. And otherwise, feel free to reach out to me. I've been the benefactor of people that have been willing to pour into me and help me along my journey and find my path. And so if I can return the favor to anyone listening, I'm happy to do that.
Awesome. All right. Well, any closing remarks or final thoughts before we sign off here?
Really enjoyed the conversation today. I think people that are in real estate today have their work cut out for them, but like all things, this too shall pass. If you can find a way to preserve reputation, preserve capital, and just endure the storm that we're currently in, then I think everybody that does that will come out the other side glad that they were able to stay.
Hell yeah, I always love to end on an inspirational note. All right, Trey Wheeler, thank you so much for coming on the show. Cool. Okay, folks, that is a wrap for episode number 6 of the Easy Deals podcast.